Hello, this is Coach Mike with WinningStockCoach.com. I'm going to get started with my weekly market overview for the trading week ahead, the week beginning March 30th, 2015. In last week's video, I cautioned you about a little bit of a resistance point, the double top here on the SPX that we closed with. And we talked about the support at that time being this swing low point of 2053.40. Now, as you can see, we pulled back from that double top, but we held that support level. Now, quite literally, the definition of consolidation is multiple tops, multiple bottoms at the same price levels. So it is possible, especially because the upcoming week is a shortened holiday week. The markets are closed Friday for the observance of Good Friday. And what we kind of have here is that possibility that we could kind of stay within this area. Now, if we did continue to fall, we talked quite a while back about a potential target point at 2006 and 94 cents. That would probably be the possibility on the downside, unless things were to get really, really ugly and fail 1994-99, in which case we're probably going to revisit some of the October low areas from 2014. Now, going over to the daily chart really quick, was a little bit of a weird week. In the midweek, we had a really bad day. Thursday and Friday pretty much held flat, as you can see here. The reality, though, is this double top pattern, should it fail the low that was made here of 2040.24, the pattern that you would see is a technical pattern that's often referred to as an M, because it would look like one leg of the M here, the center of the M, the second hump of the M, and more times than not comes down to this bottom level area, so it would probably put us really close into that, within that 0.5% of that 2006.94. Now, ironically though, if you just go on absolute price, this up run saw a lower high. We have not seen a lower low, but just the fact that it's a holiday week, it could indeed actually be a little bit slow, and that's just how it goes sometimes. But we just need to be aware that from last week's video, that caution of pulling back from the double top, that did happen, but we held the support. So at this point in time, it's a little bit difficult to kind of get an exact assumption of where we might go. So you kind of have to plan for all three scenarios. There's only three directions the markets could go: up, down, or sideways. Sideways is a little bit boring. Down can be fun. Up can be fun. So you kind of have to have a plan in order, recognizing where the sideways would be, and also recognizing that at least if it holds this level and moves upwards, you could probably at least take some short-term trades back up into that multiple top. Now, the chart I'm pulling up now is actually a 60-minute chart of the S&P 500, the SPX. And, I will admit that after this big spike here, which was the Fed minutes the week before last, I felt that we would see a little bit of a pullback, but I kind of lost my bullishness when we failed just a retest of either of these 2 points here that I'm marking with my crosshairs. But overall, this low here is higher than the lows that were made right here. You do have a bit of what is called an ascending triangle pattern here, and the last candle of the day, closing at that 2060.56, was above the breakout point of 2060.27 by a couple pennies. If this were to continue upwards starting tomorrow, I would be looking, first off at just a short-term trade into this 2074.81 area. If it exceeds that, maybe back to this prior swing low point. You see this channel that I have on my chart, that's a possibility as well for something that you might want to trade if you're using options like out a couple weeks for. But if we stay in that weekly consolidation horizontal channel, if we're just going to do the red candle, green candle game between it, then understand that you can clearly identify the support and resistance points here. and would simply want to make a short-term trade on the up move to this, and even a short-term trade on the move below down into that 2006 area, give or take a little bit. Very, very similar on the DJI, the Dow Jones Industrial Average, pulled back from that double top, but it did, with the weekly close, fail the prior swing low point of 17,749 and 31 cents. Did it just by about 25 points or so. Came really close to a prior fib target, and then right pretty much at the fib target that was derived from the daily chart to mark this short-term down move. In reality, if you were to continue down, I'd expect this swing low down here around 17,164.95. Another prior fib target we had from this pullback that it actually had given us two fib targets. It hit one, bounced up, double topped. Will probably come down and hit this. And your resistance at this point in time, a really, really good risk to reward on the short side of Dow stocks, 17,749.31. You close just barely below it. If it's truly going to serve as a resistance and you're truly going to move downwards, that would also be your stop on a short. But your target here, understand your risk to reward would be good so long as you exited on a move back above that stop point. But it would still be a short-term trade, something 1 to 2 weeks out to get down into this area. Now, generally speaking, I think if it's going to make that fall, a holiday week could be a good week to do it. Holiday weeks are usually, if they're going to go up, they're pretty slow. If they're going to go sideways, they're pretty slow. But if they're going to go down, they go down quite nicely. So we could just see the replication of the same size weekly candle down into that. And just understand that if you get to that point, come Thursday, going into the holiday weekend, the long weekend, you'd probably want to take profits on at least a portion, probably about half of a position that you took down into that. And then, that way you protect yourself and you come back Monday. And if it's not still going down, you can sell the rest, but still be protected quite a bit. Over now to the RUT, that's the Russell 2000 small cap index. We talked a few weeks ago how when the Dow and the S&P had made a little more of a pullback and failed a prior swing high, the Russell held it, popped up above it. This past week, it held the new swing high that was made over here. And I think the Russell, quite literally, unless it loses 12, 15, 21, I wouldn't look to the short side of anything. If you were, it'd be like just day trading for just a more of an instant type move. But the pattern that it's making is much more bullish in general than the S&P or the Dow, continuing to make higher highs and higher lows now. So I would have to say personally that any positive movement, you've got to just look at the bullishness overall and use that as your opportunity for long entries in the RUT. Over now to the Ndx, the Nasdaq 100. Again, a pretty similar pattern to the S&P and the DJI now with the double top that pulled back from it last week, right into the support level, 43.1490. Got a little bit below it, but managed to close back above it. Really for the Ndx though, your more stronger support level is still 42.7814. If it makes any type of positive move from here, you do now have multiple tops, multiple bottoms, the true definition of consolidation. So you'd have to kind of look at the short-term trade for the upside. As far as the short trade, the trade for the downwards move, I would probably have to recommend you let it fail below 42.7814 and look to take that into the prior swing low points down to around 41, 42 or so. But that's where I'd be looking at overall. I think the better shorts technically, as far as the risk to reward that's being established and support points already failed, will be in your DJI stocks, that 30 stock composite. I think the S&P has a little more overall bearishness than the NASDAQ or the RUT. But you'd have to kind of let it drop a little bit before you want to get all happy and go to the short side. As far as to the long side, if markets start out making a nice up move, your NDX or your RUT chart is probably going to be the indices that you would look for longs in for the up move. But really, 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 truly, just in my most humble opinion, don't be surprised if in the upcoming week you get a little bit of sideways overall or slowness, and stay within this horizontal channel that's now established on most of the indices. This is Coach Mike with winningstockcoach.com, wishing you the best of luck in the upcoming trading week. Happy Easter to those of you that do celebrate the Easter holiday and are Christians, and God bless.